Hey everybody, it's Pete. Welcome to today's episode of Stocks for Breakfast. Sorry, my coffee in the way. We got a lot to cover today. Obviously, one of the bigger stories in the news today is oil. Obviously, this is stocks for breakfast, not commodities for breakfast. But it's such a huge story that we almost have to cover it. And when I say have to cover it, I don't necessarily mean from a trading perspective, because we're going to get a little bit into how different commodities are from stock trading. I'm also going to talk about a couple of books. In case you don't know, my history goes way back to 1994 with trading, and I actually started trading commodities before I ever traded stocks. I didn't start trading stocks until 2000 full time. So this is an amazing, amazing story. We also have a bunch of stocks to talk about today. Probably the biggest one of the day, the one that's been the most exciting for our group, our community to be trading in the last week or so is Netflix. Netflix earnings after the close today. We also have a couple of other earnings, which I'm going to rattle off in a minute. But I just want to say at the beginning, I hope everybody's being safe. That's the number one thing. There's so many angry people out there right now with differing opinions about whether or not we should be staying home. And then people angry at those people. I don't want to get into politics at all. All I want to say is I hope that you're safe. I hope that your family's well. I do personally know a few people that have been affected by the coronavirus, and it was pretty angry. It's an angry virus. That's all I can basically word it, where the temperatures just go crazy. Your body feels like it got beat up. So just, I hope you're safe. Number two is, if you have anything that you'd like to discuss, I welcome your feedback. So whether it's a trading challenge you can't get through, whether it's just a comment on something that we happen to look at, if it's a stock that you'd like to see reviewed, absolutely leave me a comment. I might not get to it immediately, but I will definitely get to it. And also, it would be really awesome if you find these videos helpful, just click down in the corner there and click subscribe so you get updates. So anyway, I'm going to go back and forth right now very quickly, showing the news about oil. So in case you just hadn't caught it, or maybe oil not necessarily on your mind, oil had a historic price drop yesterday, and this is really the most important part here, where prices actually went into negative territory. They were actually paying people to take their inventory. So what does that actually look like? If we take a quick look at the charts, right now it's actually down, it was down 23.5% just a few minutes ago. Maybe if I could even bring this down to a 5-minute chart, you can see what literally just happened. This is oil over the last 24 hours. It had a 30% drop. Now put that in perspective, what that means on a day-by-day basis and the opportunity for that. Now, before we discuss how to possibly take advantage of that, even though, again, we're talking about stocks here, it's too big of a story to ignore. You'll notice here is the June contract. Oil actually, commodities and futures in general, in case you're not a commodity trader or have not done it, you can see that there is expiring contracts. So essentially what that means is very similar to options. The contracts for those commodity futures, or the futures contracts like the ES and that kind of thing, they have expiration dates. So if you decide that the oil story won't go away, you see it in your headlines every day, however you watch news, just be super aware that contracts expire. So essentially what that means is, for me, for example, let's say I wanted to take advantage of oil right now, and I believe that sometime at the end of the year, if I believe oil is going to be, after the pandemic, oil is going to go back to normal, I would be looking at the August, September, or October contract, not the most recent ones, because these will expire by the time my estimation or where I believe price will get back to normal. So I'd be looking for, let's just say for argument's sake, the September contract. So you can see the September contract is $26 as opposed to the other contract that we were just looking at, which was lower because that's the most recent contract. So I want to get back to the two books that I just kind of flashed and teased you there for a second. The first one is absolutely a hyperbolic, way exaggerated title, but the concept behind the trading strategy is 100% valid, meaning it makes sense. Not that it makes money, because everybody, That's the big thing. Everybody trades differently. We can get into the same exact price and have absolutely 500 different outcomes. But the strategy, the name of the book is You Can't Lose Trading Commodities. Robert F. Wiest, W-I-E-S-T. The concept behind the book is to say, I'll save you the money. The concept behind the book is paying attention to when commodity futures reach their historical lower 1/3 price. So I'll just keep the numbers round. Let's say, for argument's sake, crude oil trades historically between $100 and $30, all the way down. Let's say 30 is the lower 1/3 of the price. When it gets down to that $30 level, you start to build a position for a future move for it to revert back to the normal. Now, this is not a day trade. It's not even a swing trade. This is something that you would expect to have happen over months, maybe several months, okay? So anyway, that's the concept behind this trading strategy, is that there's oil in the field or there's not. There's coins in the field, corn in the field or not. There's soybean in the field or not. There's cotton, sugar. Commodities actually have a physical delivery behind them. Somebody's actually growing that commodity or digging up that commodity or mining that commodity. Gold, same thing. Or it's there or it's not. And that's how prices of commodities fluctuate. So if you remember yesterday morning, heading into the day, we mentioned that demand was down 30% for oil, but OPEC only cut 10%. And we literally said something's wrong. It doesn't make sense. And look what unfolded. I'm not a genius or anything, like it's just basic math. So if you're interested in a fascinating topic and what could be setting up as a historic trade, again, I want to be very clear. Commodities are dramatically different. Margins get affected dramatically different with the kind of spike in volatility. You need to be aware of what your contract expiration dates are. It's very different from trading stocks, okay? But if you do want to dip your toes in and you don't want to get into like the reason I stopped trading commodities, which is probably around the late 90s, you end up staying up at 2 o'clock in the morning watching weather reports where they're growing corn, and it becomes a little distracting. But this is a fascinating read, and also I just wanted to give you the strategy behind that. The other book I wanted to talk about was this one called The Taylor Trading Technique. Let me hold it up so in case you want to, by George Douglas Taylor. I was actually first introduced to this book by Linda Raschke in the mid-90s. It's just a fascinating book, but I'm going to give you a caveat. Incredibly difficult to read. It was written, it's a short book, but written by a commodity trader in the 1950s. I believe he was a grain trader. And essentially what he does is he walks you through how commodity prices fluctuate, and he uses stocks a little bit, and you could use the same strategy in stocks. It was actually foundation for what my saturation play strategy came from, where we use the saturation play for managing how to enter trades and how to manage winning trades over a 4 to 8 day window. It's a huge part of the coaching program because let's face it, getting into a trade and managing a winning trade, not the same thing. So it took me 10 years to finally develop saturation plays and really get to the point of where I fully understood how prices act over that 4 to 7 to 8 day window. And the most important thing is it really helped me to go into the day predicting what I expect to have happen based on the last couple of days price action, based on the previous day's close, and what I expected to have happen on the open. So if you think about the power of that concept, where you go into the trading day saying, based on what I'm looking at, based on how I read the tape, tomorrow I'm expecting XYZ stock to open higher as the first push. So open, push higher, and then trade lower the rest of the day. So I believe that the first high of the high of the day is going to get put in within the first 30 minutes of the day. Think about that. That's a pretty powerful way to head into the day. You're actually predicting what's going to happen on the open based on reading the tape over the last 3 to 5 days. And here's the key. We know that trading, winning trading specifically, is about probabilities. That's all it's about. So whether you use saturation plays as ways to enter new opportunities, and I'm actually going to show you an example today. We'll pull up the stock in a minute because we finally have an opportunity to look for a stock that actually is meeting the criteria. It's a stock that's been in the news because of what's going on in the world, but it's the first one where we actually have an opportunity to say, okay, that's meeting the criteria. So anyway, that book, The Tailor Trading Technique, and I'm not exaggerating when I say this, it took me 10 years to understand it. Then when I finally, and when I say understand, it's not well written at all. It is basically almost handwritten notes that were transcribed, and you can see snapshots of his notebook from back in the 1950s. But you could stick with me, and I could show you how to use it, or you could buy the book, read it, and drive yourself crazy for years. But essentially, I'm going to show you the basic part of the setup and how we would actually get to the point where we would use that information, that tape reading skill, to determine where we expect our stock to open tomorrow, what we expect to have happen on the open, and then when that unfolds, trade flawlessly and just be in an absolute position of power, because you're going into the day saying, here's what I expect to have happen in the first hour. And if that unfolds, here's what I plan to do about it, because it's doing exactly what I expected. Now, most traders will go into the day and have 5 stocks, and 3 out of the 5 won't do exactly what you expected. But the other 2 do exactly what you expected. You should clean up on those 2. Don't worry about the 3 that didn't follow through. It's all probabilities. But those 2, you had the guts to say, wow, based on what I expected to have happen, it did exactly, it opened lower, found the bottom, bottomed out exactly where I thought, and reversed, and I had a beautiful trade for the next 3 days. That's where we want to get together. And again, I can't get into too much detail in the YouTube videos. We cover this in real time in the coaching, and I'm not asking you to join the coaching. You only could decide if your current situation is costing you, and if you want to make that leap into coaching. It's up to you. Only you can decide what it means to stay in your current situation. But if you'd like to find out more about the coaching, I'll leave my email below. That would be awesome. So anyway, I thought that was kind of exciting because the oil story led into some really fascinating stuff, which kind of brings me back to some really fun times where I first started trading commodities, and those 2 books were pretty cool. So anyway, today's earnings before the market opened, scheduled before the market opened: Coca-Cola, Philip Morris, and Lockheed Martin, LMT. So KOPM and LMT. Scheduled after the market: Texas Instruments, which is TXN, Snap Inc., obviously Snap, SNAP, but the most important one from a trading perspective, from a let's watch it together perspective, is Netflix scheduled earnings after the close. So anyway, we're going to get into the first. I'm going to cover the one stock that I mentioned that actually meets the saturation play criteria. I'm going to then go into a quick analysis of the market, and then we're going to get into some opportunities. Again, if you have anything you want me to look at in a future video, absolutely leave a comment. If you like these videos, please subscribe. That would be awesome too. The one thing I want to point out is we came into the week. If you watch the video over the weekend, I came into the week with a forecast, but my forecast isn't really nothing more than me using the tape reading skills that I'm hopefully showing you guys and girls to analyze. And again, we're not analysts. We're analyzing the tape to make a forecast about how we're going to trade the coming day, the coming week. And we came into the week saying we expected selling, we expected profit taking, we expected the historic rally we had off the lows based on everything we saw to be rolling over. We're going to go to the market. We're going to, on the weekly charts, to see what that means right now and how we're going to expect to trade the rest of the week. And I'm going to first start out, because I teased you about the trade from this book. We're going to take a look at that first. So let's go over to the charts. And the one thing that's interesting is the criteria doesn't matter if there's a trend. You could technically be trading it back and forth. I tend to only trade it when there is a trend to use as entry and exit signals. So we're going to talk about this stock, UNH. So essentially what's going on here is you can see we actually rallied up into resistance. We actually said there was only one more day profit potential into the resistance and to look for it to pull back. We actually traded into the resistance, had a bearish U-turn, and now we've closed negative 2 days in a row. And most specifically is we closed on the lows. I would have liked for this to have been a bigger red candle for a perfect textbook saturation play, but here's the play for today. The play for today is for UNH to open lower. Actually, you know what? I'm actually going to pull up, let me just go to, I just want to pull up a different chart because I'm going to give you the exact price. How's that for a build-up? I'm going to give you the exact price and the reason why we're looking at that exact price. So what I'm going to talk about, and we've mentioned this quite a few times, we've talked about the average true range of a stock. So I'm going to go back to the screen. So the average true range right now, the ATR of this stock is $18. So I normally don't use the entire average true range to start building my position. It was 1834, but let's just say 18 for argument's sake, just to keep the math simple. And let's say the previous close was 282. So the previous close was 282 and $18 is the average true range. And yesterday gave us the setup. So I don't use the full number. So what I'm going to use is, again, just for average's sake, I'm going to use where I believe the stock is going to open lower, push lower, a percentage of the average true range. And that's where I'm going to start to look for my entry for this stock to reverse and head back to the upside. So I'm just going to use round numbers. I'm just going to use 20 just because it's easier than 18. Let's just use 20. So generally speaking, I'll use a certain percentage. So let's just say in this argument, in this case, I'm going to use 80% of 20. So that would be $16. So I'd be looking for this stock to open lower, push lower by $16, which again is only 80% of what it normally does from high to low. So 16 from 282 would be what? 266. So I'm looking for this to open lower, push lower, trade to 266 over the next day or so, hopefully today, push lower, look for that to bottom out, and then reverse. So think about what we just said. We're looking for it to open here, push lower, trade lower by $16. Again, that's a area that we start to look for our reversal candlesticks, and find that be the bottom of this move to the downside and reverse. Now, what sets this up is the fact that it's already been down 2 days in a row. Generally speaking, I like it to be a little bit more than that, but we're looking for at least 2 days of positive price movement in one direction, positive price movement in the other direction, closing, in this case, on the lows, a move to the other side to sell or sell short would be the other way. So we're looking for here, push lower, a percentage of the average true range. And again, the key to this and why it's so exciting and why it's easy to replicate is you're looking for stocks that only match certain criteria, which is 2 days in a row, well offered in this case, closed on the lows 2 days in a row. You know, go look up the average true range. That's where you're expecting it to open lower, push down to the average true range percentage that I just gave you. Find support and then reestablish that uptrend again. Is that a lot? No, it's not. Not if you really want to take this to the next level and be a professional trader. So man up, girl up, put on your big overalls, pause the tape, watch that, because that one strategy I just gave you has made me more money than I can even tell you. It is the foundation of learning how to read the tape, and I have plenty of students who will attest to that, because once you get a market that is flowing back and forth, which we don't really have in an awesome way right now, but I was excited because crude oil led to the opportunity to talk about that book, which led to the opportunity to show you this trade. Once you really fully grasp saturation plays, and again, it requires us talking about it every day, but once you fully grasp it, you get this sense of you actually know exactly what's going to happen the next day in the market, because you're putting the pieces together to reading the tape. You're seeing, okay, it's positive 2 days in a row. What kind of open would I be expecting? What kind of close would I be expecting? And this is actually a decent example here where you actually get to push lower and you'd be looking for the reversal. This is another one you'd be looking for the reversal. But this right here is exactly the trade. Okay, 2 well-bid candles, right? You get a nice positive green, large range. The one thing I want to point out here is I actually mentioned I wish this was a larger red candlestick, because when you get 2 large candlesticks in a row, it's a better setup. Kind of what we got here, where the second one was a large candlestick. You actually then got a push higher and a reversal. That's the kind of trade that we're looking for. So anyway, I don't want to beat that into the ground. I kind of wanted to tease you with it. I kind of wanted to talk about the power of actually understanding how to read the tape and the significance of what it could mean going into the day, where you have absolute conviction that you're calling what's going to happen in the market because you're reading the tape over that 2 day to 5 day to 7 day window. Does it take time to learn how to do that? Yeah, you bet your ass it does, but that's the whole point in coaching. Again, I'm not going to ask you to join the coaching. I'm only going to ask you, where are you now and where do you want to be? What is it costing you to not be where you want to be? So just floating that out there. If you want to find out more, you can always email me. I'll leave it below. So talking about the market, last week we had a pretty strong feeling about the market that as long as it stayed above the open and stayed well bid, we were going to be looking for longs, and that was the better trades last week. Now, what do we have so far this week? So far, we have a lower high in the SPY, and we are, as of yesterday, trading below the opening price. So we're going to kind of float around that during the week. So this would technically be an inside candlestick right now, which, again, that inside candlestick represents indecision. So that's where we are right now. We're not out of the previous range. We're not making new lows. Indecision, which is a continuation of what we saw in the daily charts last week, where we're just seeing a ton of melted candles. Now we have 1, 2, 3, 4, 5, 6, 7 melted candles in a row. If you're not familiar with melted candlesticks, it's from my course. Melted candlesticks means opened and closed in the same place, where you can see the candlestick is actually melted body. I also call them indecision candlesticks because they opened and closed in the same spot. So really fascinating price action going on right now. Yesterday's opening price on the weekly chart is stuff that we're going to take a look at and monitor for whether or not we want to be bullish or bearish. I'm going to say this in a trading perspective. Best case scenario, we turn positive again because the weekly charts are well bid and we start to trade over Friday's highs. Best case scenario, because we're clearing new levels and continuing the momentum. If we happen to go to the short side, there's not a lot of great sell shorts right now. The only stocks that I'm really looking to sell short, possibly, and these aren't even A-plus trades, Wells Fargo, if it breaks 25 to the short side. JP Morgan, we covered yesterday, which had a beautiful, beautiful $4 move, to the downside yesterday. This is actually an interesting trade because we're not trading it off the order flow. We're trading it off the poor guidance and the fact that they have negative earnings guidance going forward. We were actually looking for a spot to short it because you can see on the daily chart, it's not the greatest opportunity. It's kind of stuck in the middle of nowhere is really what I would say. So I'm really trading this more on a shorter term perspective based on guidance and the negative bias on the stock right now. We actually made new highs, failed, and this was a $4 move to the downside just off that short term, again, tape reading skill on the news. WBA is the only other one that I would consider looking to short sell right now. And this one actually has a little bit more room from 42 down to 39. Again, not really awesome trades on the short side. That's a big thing I want to point out. Not really amazing short sales, despite the fact that the market's rolling over a little bit. When I say rolling over, it's also a healthy pullback. A couple of stocks that were really interesting, and I'll show you why. They had some increased volume and breakouts. So I'm going to just take a look at that. STNG, that's what I would call fuel. Remember, the large green or large red candlesticks, I call them energy candlesticks, but fuel is when a large volume candlestick breaks out of a trading range. So this is definitely one that's interesting to keep an eye on today. Shack was in the news as well, and in a positive way, where they decided to give back the government loan that they got for small businesses, which I think was $10 million. But more importantly, from a tape reading perspective, again, stuck in a trading range, but large volume candlestick. We need to see it trade above 48 before we get involved. Don't get caught in this garbage where it gets to a level and fails. But this is pretty interesting. Oxy, one that we've been talking about for a while, obviously a petroleum company, some massive, massive volume. You can't even see the price. It's actually in the volume candlesticks here. But this is going to be an interesting one to keep an eye on as well. We had a couple on the long side that were the opposite of fuel, which we'd actually call exhaustion. And this is a great example here yesterday. First of all, this is lifetime high, so you never want to get out of a trade that's making new lifetime highs if you happen to be long. But the point that I want to make out is yesterday we mentioned that shop reached exhaustion. It's a reason to be cautious about adding to new longs and to protect your profit. So you don't necessarily bail on the trade as much as you keep moving up your trailing profit. The higher it goes, you keep moving up your stop loss to lock in those gains. And the reason you would do it now as opposed to previously is because of this massive spike in volume. That is generally what's known as a capitulation move. I call it exhaustion, meaning the buying or selling pressure has exhausted itself. And you can reasonably expect in the short term it would reverse. And if you spot that, you want to pay attention to it because you don't want to give back profits, which ironically, I just happen to notice on the chart here. Look at how obvious that is. So after you have this big run up here, which is started by fuel, look at that fuel candlestick, and ended by exhaustion. So that's ironic. I swear I didn't notice that until now. But that is actually a pretty good example of what we are potentially looking at here. As far as stuff on the long side, again, some more COVID stocks in the news, but I'm going to talk about a couple that just have piqued my interest. BBY, which is Best Buy. I mistakenly said it was Bed Bath & Beyond the other day. Best Buy continues to stay up near this breakout level. No trade yet. This is a good example of why you want to see it clear the level and stay there. BMY as well. Pretty nice breakout, but again, we need to say stay above this level. We're kind of working the tracking journal before we actually get into some trades. We are continuing to pay attention to Slack. Do not take this off of your list. Keep it on your list. Set your alert. It's got to be above 30. The alert triggered yesterday, but did not give us a trade. That's why it's an alert at this point, because you can see all the struggling it's doing at this price. What else do we have? mRNA as well, another good day trading stock. Not an easy stock to swing trade. If you're going to get involved in any of these stocks that have something to do with the pandemic, you better have discipline because they can move pretty quick. Give you an idea what it looked like intraday yesterday. This was just a phenomenal intraday trade. But again, these swings are pretty wide. You're talking about $2 or $3 15-minute candles. You need to be able to handle that as a day trader. If you're not day trading it and you're looking for a swing trade, I personally would not be getting long after 1, 2, 3, 4, 5, 6 well candlesticks in a row that closed off the high. But a really good stock to be active in. Etsy actually pulled up a interesting spot today as well. I'm actually going to remove the volume here because it's kind of distracting. We broke out to new 20-day highs in Etsy. Look at these green candlesticks as far as closing above the open. That's where we really get into reading the notes and inside of the whole song. We start to say, oh my gosh, something different's happening here. What I'm looking for now in Etsy is I'm looking for it to pull back, pause above this level because I'm not getting long into this, and then ultimately look for a move to 70. So we're setting up in Etsy a $10 trade with a pullback to 60, looking for it to hit 70. Two more stocks that meet the criteria. Actually, I'm going to go to J&J, which also was a little bit interesting today, getting up to that resistance level as well. I'm looking for it to pause around the 154 level, looking for a new swing trade long. AU has been on a lot of people's charts lately. I like it, but I like it above 24, not at this level. Don't be getting long into resistance. And again, a couple of stocks that are playing into the pandemic as well. IMMU, I like it above these levels, and a relatively cheap one, right? A lot more people can get involved at the $22 level. Sometimes some of these more expensive stocks you can't. Huge explosion in price action and volume yesterday, so we got some tape reading principles there. I like it above 22. And let's see, what was the last one? NVAX was another one that just had a monster move yesterday. Again, a great stock to be on the day trading side of it because you can really get in there on the short-term time frames and manage your downside, assuming you have discipline. If you've never day traded stocks that can move this quickly before, I don't recommend it. Quite honestly, if you're somebody who can't make fast decisions and doesn't have a definitive trading strategy, you want to stay away from something like that because quite frankly, they'll move too quickly, and it's just not a battle you want to pick. And I say that it's funny. We actually had our weekly coaching call yesterday afternoon, and I spent most of it talking about not over trading if the market is choppy and your stocks aren't doing anything. Because I will tell you from personal experience and from managing my trading firms over the years that the single biggest reason a smart, hardworking trader won't get paid is because you overtrade when it's not obvious. So you need to be able to go into the market to look at your stock every day and say, oh my gosh, they are definitely in charge of that stock today and this week and this month, and I can't wait to join them. So when I say they, I mean the smart money, the stocks that are getting moved around by large buy and sell orders. You want to go into the day saying, wow, it is really obvious. Those are the opportunities you want to be a buyer or a seller for. If you can't say, wow, it's really obvious, you shouldn't be trading that stock anyway, okay? So let's tie that into the market. The market is an inside week right now, which is a continuation of, despite the fact we went higher last week, it was still a super choppy week. We had 7 melted candles in a row. The line in the sand this week is, again, to pay attention, the same thing as we did last week. We've made lower highs on the SPY and the weekly candlestick. Yesterday, we traded below the open. So that's the line in the sand for us to use is from a tape reading perspective. If we want to be short this week, it's slim pickings. So you might want to step aside or drop down to shorter time frames, which that can be tricky too, because then you drop down to shorter time frames, you kind of get into that shorter time frame mode. And if the market bottoms and turns around, you miss out on the bigger profits because you're kind of like frozen on those shorter time frames and micro analyzing stuff. Keep an eye on that UNH trade and the saturation play today. It'd be pretty interesting to see how it plays out over the next couple of days. So anyway, I'm Pete Renzulli. Thank you so much for attending Stocks for Breakfast today. It's Tuesday, April 21st. If you found this video helpful, absolutely please subscribe, give us a thumbs up, and leave a comment if you have any questions. Take care, everybody.